Today, GameStop starts back up again. Shares surged today, and it's not exactly clear why. Plus, it's a high of 74 degrees in Houston today, but memories of last week's deep freeze and subsequent power failure in Texas haven't thawed. Our correspondent is on the ground with some answers about how things got so out of hand. And finally, the economic fallout of the pandemic has devastated large swaths of the country. But the pain hasn't been endured equally across race and gender lines. We've got new data illustrating the outsized financial burden Black women have been carrying over the past year. I'm Pippa Stevens, and this is CNBC After Hours. An ugly day on Wall Street. Stocks plunged, and all three major averages turned in their worst day of the month as bond yields surged. The yields on the benchmark U.S. 10-year Treasury note, which is essentially the interest rate that the United States pays to borrow money, soared higher today. Technology stocks are particularly sensitive to sharp rises in rates. Why? Well, higher rates make it more expensive to borrow funds, and tech companies rely on easy borrowing to fuel growth. You can see that reflected in today's market action. The Nasdaq was the worst performer of the big three indices. It fell 3.5% today, the index's biggest one-day sell-off since October. But it wasn't all red across the board today. GameStop shares finished nearly 20% higher, but were up as much as 80% at one point during the session. The gains come just one day after the stock rose more than 100%. That's right, GameStop is back. And the reason why shares are surging higher this week is, well, nobody's quite sure just why. Bob Pisani explains.
It's not clear why the stock has moved at all. Jim Bell, the CFO, was dismissed. There was reports that he was dismissed because the board was dissatisfied with the efforts to move to a digital platform. GameStop's been a declining business for years. They sell video games in stores. The company's been trying to transition to selling games on a digital platform, and that's how people buy games today. They buy them digitally. They don't go to the store and buy them, but they've met with very limited success in doing that. They did announce that the CFO had been fired, and there's been some discussion about whether or not GameStop would be able to successfully transition to a digital model. We don't know. There is no real news around this. There was Ryan Cohen, who's been a real activist for GameStop, tweeted out a photo of an ice cream cone, implying somehow that there might be something sweet coming for GameStop investors. But there's been no news around that. So what happens here is just movement in a stock like GameStop, when it hits a certain level, all of a sudden can initiate more buying, because people get like Pavlov's dog. All of a sudden they see a move up and they start piling in because moves up in the past have been successful. So they figure, hey, maybe we can ride this for a few dollars, and momentum investors see it and everybody piles in. So you get retail investors, you get GameStop believers, then you get professional investors who pile in on the momentum, and all of a sudden a stock that's $50 goes to $90 on essentially nothing. It doesn't make a lot of sense, but when you get enough people piling in, believing even for the short term that something can work, it can work. None of this is very satisfying because it doesn't answer the simple question of fundamental investors, which is why would a stock double in an hour and a half period on no news? And the answer is that there is no fundamental reason why it would. You have to either believe something is going to happen, or you have to be a cynic and believe that I'm just piling in for the short term. I don't know or care. All I care about is being able to buy low and sell high, and maybe I'm in it for 15 minutes and make a profit. If that's the case, I don't care if there's any news. All I care about is I'm on the right side of the trade.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
And I think Robinhood has to walk a fine line between letting people more freely invest, more freely back the companies they care about, which was very hard to do before, and play the stock market like a casino where we know they're probably just going to lose.
The Biden administration is not going to lump everything together in one giant bundle and then negotiate that geopolitically with China. They're going to look at what's national security, what's economic security, and there's a close link between the two. Let's focus on what's more important. They're going to make America more competitive in industries such as the semiconductor industry. And that's how we're going to maintain and grow our lead over China.
We see great early momentum, we see a massive market, and we see an asset base that will clearly perform in the space. And again, when you looked at the content lineup we showed yesterday, I think a lot of people really got it and came away saying, this Paramount Plus thing is real.
We're underpenetrated from a market share standpoint in carry out relative to delivery. So as the economy starts to open back up again, and as we get vaccinated and back out there and into the world, we see a huge opportunity to grow that carry out business in 2021 and beyond.
In the opening hours of Monday, February 15th, the power grid in Texas came dangerously close to complete failure. The grid operators were just 4 minutes and 37 seconds away from collapsing. That's what the grid's chief executive said yesterday. The brutal winter storm that wreaked havoc on the state's unique and unregulated energy infrastructure left millions without power or water. At one point, 48% of that grid was offline. According to the Texas Tribune, as of yesterday afternoon, nearly 1.5 million people were still facing water disruptions. So how did things get so out of hand? Brian Sullivan is on the ground in Texas with some answers.
It really was the perfect storm of events that happened in Texas that wiped out 48% of the primary Texas grid operators' power, which is not quite half the state's power, but a huge chunk of it. A company called ERCOT, which is a not-for-profit that is overseen by the Public Utility Commission, and a lot of anger and finger-pointing at a congressional hearing in Austin today about that. Let's talk about all the confluence of events that led millions of people to be without power for days, often in one of the coldest freezes and worst winter storms in Texas history. Number one, it was the storm itself. It wasn't just that it was unusually cold, it's that the cold lasted longer than expected, or at least in previous storms. That sent demand for power skyrocketing. The majority of Texas homes are heated by electricity. Everybody's turning up the dial. That increased demand for power. At the same time, the cold weather began knocking power plants and wind turbines offline. There are a variety of reasons for that, but once they had to go back into the power market to try to find gas, they either couldn't, or the gas was so spectacularly expensive that there was some question about whether or not smaller utilities would even be able to afford it. And of course, Texas famously has its own grid system, only small connections to the rest of the country. So other states, if they had excess power, were not able to transfer the electricity. For natural gas, it was indeed, of course, the cold. Pipes froze, gauges froze. They were unable to simply get gas through the lines to power the plants. What about coal? Like the power plant behind us, although we're not sure if this one went offline, they've been tight-lipped about that. The coal stacks actually froze and were so cold they were not able to grind the coal up to put it in the boiler to make the heat. Wind turbines. Before the storm hit, you actually had fog. It's about 75 degrees here today. The fog then froze, condensed on the wind turbines, and actually made them unable to spin, or it would have been dangerous had they continued, so they took those offline. A nuclear power plant also went down. So you had this terrible confluence of events. Super cold for super long, demand for power up, and the biggest energy producing state in the country, Texas, also the biggest consumer, by the way, simply unable to meet the power demands for millions of people, which not only resulted in very scary, very cold times, but also in the loss of life of at least 35 who have been confirmed dead from the storm.
Okay, let's get to today's numbers round. We'll kick it off with 16. Costco is raising the minimum wage it pays hourly staff to $16 an hour. That's $1 more than retail competitors Amazon and Target pay their workers. Costco's CEO made the announcement today during a Senate committee hearing. The company's move to hike the minimum wage comes as President Biden's proposal to gradually raise the federal wage to $15 faces an uncertain future as part of the $1.9 trillion COVID relief package moving through Congress. Next, $1.14 billion. Cryptocurrency exchange Coinbase filed its S-1 today. That's the paperwork companies have to file in order to go public. And according to that filing, Coinbase had a massive 2020. Its revenue more than doubled to $1.14 billion. That's compared to roughly $480 million in 2019. The company also revealed it had more than 40 million verified users at the end of last year, and nearly 3 million of those were making monthly transactions. Coinbase's arrival at the public markets coincides with a major boom in crypto assets. Earlier this month, the price of Bitcoin, the most popular cryptocurrency, hit nearly $59,000. Before December, it had never crossed 20K. And finally, 57. Black women are bearing the brunt of the financial pain from the coronavirus pandemic, according to findings from a new CNBC and Acorns survey. 29% of U.S. adults say they are counting on the next round of stimulus checks just to get by, but 57% of Black women say they're relying on the relief, while 25% of Americans had to tap into emergency savings since the crisis began. Nearly 40% of Black women said they needed those savings. The findings underscore the unequal burden people of color, especially women, have had to carry over the past year. The full survey is published on our website. For all the details, go to CNBC.com and download the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday and Thursday, so be sure to catch us then.